why your rent will likely be going up as a result of the Federal Reserve cutting interest rates. Yes, I know this sounds completely counterintuitive, but it's all going to make sense here in just a minute as I discuss the details and give you the full breakdown of what is actually happening and how this all translates into your monthly rent payment. Let's get into it and talk through the details. First off, can I ask a huge favor of you? Please make sure to like the video with the big thumbs up button right down below. Thank you so much. Really appreciate that. Also, please make sure to subscribe to the channel as well with the big subscribe button right down below. Again, totally free to do so. Thank you so much for your support. I really appreciate it. And let's talk through the details. All right, so as of recently, we heard out of the Federal Reserve, they're going to start their interest rate cutting cycle. Now, we can anticipate between now and the end of the year, their next couple meetings here, as well as all through next year, we will likely continue to see them cutting interest rates from very high levels that we've been at for the last several years here. But why would cutting interest rates actually translate into higher rent? That makes no sense whatsoever. I agree. It doesn't really make a whole lot of sense, but when we look into the internals of what's going to be happening with interest rates coming down, then it actually does make a whole lot of sense. In fact, just a few days ago, I was out in a separate video talking about how the Federal Reserve cutting interest rates is going to jack up mortgage payments as well. In fact, kind of funny, in that video, I saw some comments coming in saying, "You don't know what you're talking about. I've never seen my mortgage increase." Okay, well then obviously you didn't listen to the video because I explained all the details. I'm not talking about principal. I'm not talking about interest. I'm talking about some other things. So I want to explain the details and how this translates into rent payments as well, okay? So whether you're living in a single family dwelling, an apartment, it does not matter. It's all one and the same, okay? Now, one thing I want to point out quickly, just because the Federal Reserve came in and lowered interest rates a little bit, it's not going to increase rents instantly. But I would say over the next year or so, we will likely see some pretty substantial rent increases, okay? Let me explain exactly why. So when the Federal Reserve cuts interest rates, what that essentially does is makes money cheaper. What I mean by that is that the borrowing cost, the cost to borrow money with a loan or a mortgage or a line of credit, whatever it happens to be, gets cheaper, right? The interest rate goes down. That means it costs less money to borrow money with a loan, right? Borrowing costs are less. That is good for the overall economy, and that's exactly why they do it. When they lower basically interest rates, the cost to borrow money goes down, therefore more people want to borrow money. What happens when more people want to borrow money? That simply means that people that want to enter into the market, as in the real estate market, whether they want to buy a single family dwelling or they want to buy an apartment building, multifamily, whatever happens to be, then they have this money to do so. What happens when you see more buyers stepping into any market? We could be talking about any market whatsoever. It does not matter. We could be talking about eggs. We could be talking about cans of chicken cans of beans. We could be talking about watermelons. We could be talking about shoes. It literally does not matter. When you see buyers stepping into any market, that means there's more demand for that product, okay? So if you look at this situation, as mortgage rates, as in loan rates, come down, the interest rate on these products, mortgages and loans and things like this, when these interest rates come down, it simply means that it costs less money to borrow and buy those things, right? To buy those assets. So as a result of that, when you see more buyers stepping in, which we will, as interest rates continue to come down, we will see more and more people buying, whether it is single family dwellings or investors coming in and buying multifamily apartment buildings, doesn't matter. When money gets cheaper, you see everybody, more people coming into the market. As a result of that, we will see demand driving prices higher. Okay, I still don't get how this is going to translate into higher rent. I'm getting there. Sorry, I know it's taking a little while. Here's how it translates into higher rent. As valuations increase, so more buyers in a market driving prices up, prices of those assets increase, then what happens as well? Yep, you see valuations go up. What happens when valuations go up? Then the greedy county comes in and says, hey, look, we're greedy, we're the county, and we've assessed your property at, 10% higher valuation. Maybe it's a $300,000 house. Now they're saying, hey, we're the greedy county, and now we're going to say your house is now worth $330,000. We're going to tax the crap out of you now, right? They're going to raise property taxes. Well, guess what happens? If that single family dwelling is an investment property for an investor, and those property taxes come back into the mortgage payment, jacking the mortgage payment up, what does the investor say? Now my cash flow has been decreased. Now my expenses have increased. I need to pass these expenses on to the tenant. Therefore, I'm going to raise their rent. Does this make sense? Same thing goes with an apartment building. An apartment building's maybe, I don't know, let's just use $1 million for easy numbers here. It's $1 million. Let's just say it goes up by 10%, the valuation. Now it's $1.1 million. The greedy county comes in and says, hey, we want our fair share. And they stick their greedy, sticky fingers out and they want a piece of this too, right? So now they raise property taxes on that building by, say, I don't know, $2,000 a year. I don't know. I'm just making up numbers here for easy math, okay? Maybe they say they raise it by the property tax by $2,000. Okay. Now that $2,000 comes into the mortgage payment of the investor, whether it's an individual or a investment group or whatever happens to be, I don't know. Just giving examples here. Now the property taxes have gone up. The investor group says, our expenses have gone up. Our margins have gone down. Our cash flow has decreased. Therefore, what do we got to do? We have to make this up. We have to pass those expenses on to the tenants. Therefore, raise rent. Literally, that's how it goes, okay? Does this make sense? So as a result of the Federal Reserve doing one simple act, cutting interest rates, this translates into more demand in the market, higher valuations because prices have been driven higher. More demand equals higher prices, equals higher valuations, equals greedy county equals higher taxes equals higher rent because the investors have to pass that on to somebody and it's the tenant. Does that make sense, right? Now, one other thing as well. I said this the other day in the other video as well. Insurance is the same thing. As valuations go up, the insurance company says, hey, look, your house is worth more. Look, your apartment building is worth more now. We need to assess more to you in the form of a premium because if something were to happen to that property, it's going to cost more money to replace it. Something like that, right? So they raise premiums on insurance as well. Same situation. Insurance raises premiums, the cost goes up. The investor says, uh-oh, that is coming back to me. It's more expense for me. Now I need to pass it on to the tenant. Guess what, tenant? Sorry, rent is going up, right? So there you go. It's kind of like a double whammy. Now, generally, property taxes a lot of times go up more than insurance premiums. Not always. Like, for example, right now, insurance premiums in like Florida, for example, are absolutely nuts. If you're living in Florida right now and if you own something like a home or something like that, you've probably noticed the last year or two here, insurance premiums in Florida in particular have gone absolutely bonkers. It's crazy, right? I mean, you hear all these stories out there like people can't even afford places in Florida anymore because insurance premiums are so incredibly high, or they can't even get insurance. There's some major, huge brand insurance companies that have completely pulled out of Florida, just saying, we're done here. We can't make any money here. We're losing so much money on all these big hurricanes and storms that come through. It's costing us billions. We're out. We're done in Florida, right? So that's another situation as well. That, when they pull out like that, now there's less providers, and what can they do? They can kind of monopolize the market a little bit. Not totally, but that's kind of how it works a little bit. So does this help you a little bit to understand the situation? So I know at the beginning of the video you thought, no, Federal Reserve cutting interest rates, that's not going to translate into my rent. Initially, right away, no, you're right, it's not going to. But in the next year and a half, 2 years, as we continue to move forward into the future, obviously right now as I film this video, we're kind of late-ish in 2024, but as we work our way through 2025, 2026, as the Federal Reserve continues to cut interest rates, and we continue to see more and more buyers stepping into the market, driving prices higher, I would anticipate in 2025, 2026, you will see a significant move higher in rents. Why? For exact reasons I just gave you right here in this video. Does that make sense? Not that I want it to happen. I'm just simply saying this is the reality. You got to look at the big picture. A lot of people aren't going to tell you this stuff, but it's the reality. This is how it works. This is called business, how it works. Anyway, I hope this helps you to some degree. Again, I know it might be frustrating, but don't get all, worked up now. It's not going to happen now. It's going to take time, but I'm just simply saying this is how it's going to work. Now, if we don't see a huge drop in interest rates and we don't see a huge surge in demand in the markets, then all of this is not going to be nearly at the degree that, I kind of made it out to be. But if we see a huge drop in interest rates, then for sure we're going to see a huge explosion in rents because valuations go up very, very fast, like what we saw in 2020, 2021, 2022, when valuations were going up very fast when the market was very hot, right? Make sense? Anyway, hope this helps you. Please like the video down below. Again, thumbs up button. Thank you so much. Really appreciate it. Otherwise, subscribe to the channel as well. Big subscribe button down below. Thank you so much for your support. Check out the other videos here on the channel. The thousands and thousands in the video library. Nearly 5,000 there. Otherwise, down below in the description at the top of the comment section, I've hand selected some very popular videos for you there. Check those out. Otherwise, right now, showing up on your screen as well, you'll see some videos. Check one of those out. Thank you so much. Really appreciate it. Have a nice day. Take care, and I'll catch you again later in the next